Welcome to another episode of Money in the Bank with Frank. Today we've got a great guest with us now that we've got a little more clarity, and it seems that some of the bigger financial institutions have gotten the approval to get some ETFs passed. Today we have David Brill with us. He's a managing director and has been involved in this space for, seems like, since the beginning. David is a seasoned technology and financial services executive. Notable accomplishments include the listing of Ethereum on one of the first regulated digital asset exchanges, which is pretty neat. I know that he worked. We'll talk about a little more of it in the coming parts. Let's go over to the disclaimer. So, David, how was the Michigan game?
Well, Frank, first of all, I'm really pleased to be here with you today. I'll give my disclaimer that anything I say are my personal views and not of my employer. It was tremendous, Frank. It's very rare you get to see your team play for a national championship, and I wasn't going to miss the opportunity to go to Houston and see my Michigan Wolverines kick Washington's butt around the field a little bit. So it was great.
That's great. That's great. Well, welcome. Thanks so much for coming on the show. We finally have some really great things to talk about.
I'm really excited to talk to you and your listeners about what's been going on in the space. And as you said, there's a lot of exciting things coming our way this year.
Great. Well, tell us a little bit about what you've been up to. Tell us kind of what, obviously start off, if you would, just a little bit with some background. I know that you worked with the Winklevoss twins. I know that you were really critical in the very beginning of, getting regulation in New York, as well as, kind of driving that, which obviously being able to drive that, you have some pretty interesting insights that other people didn't.
Sure. Well, I was a legacy financial services and technology lawyer, and in 2015, I stumbled across Bitcoin, and I immediately fell down the rabbit hole. And it's really an exciting space. It's very rare that you get to create a whole new market, and that's what's gone on over the past few years. I had the good fortune of helping get Ethereum get listed on a regulated exchange, and I worked on the first Bitcoin ETF filing. So I feel like 2024 is like the time when the baby's been born, and like all the work and effort that's gone into it has now led to this moment, which is fantastic. And the great thing about it is I don't think an ETF defines the crypto space, because the crypto space is growing and it's really important on its own, but this just gives it a way for mainstream retail investors or institutions to get access to it. So it's a nice entry point for institutions and retail folks who wanted some exposure to this alternate asset class.
I agree. The one thing that I see is it really just gives a little bit more of a stable footing. It validates the space as a whole. It shows that it's not just the quote unquote dumb money that is, YOLOing. This actually shows that there's actually institutional support, and for those institutional or even individual investors that want to have exposure but aren't so technologically savvy, they can get a little bit of exposure to a small part of what we know as, the blockchain technology.
Yeah, I totally agree, Frank. And I think what it does is it puts Bitcoin in a wrapper that a lot of your listeners are familiar with. They're familiar with owning ETFs. They're familiar with buying them either through you as an FA or through their RIA, or through buying it online through their online trading account. And maybe they weren't as comfortable with a crypto exchange. I use crypto exchanges. I'm very comfortable with them, but it's totally understandable if they wanted to go through more traditional means. Now they have access to it, and SIPC insured security, with reputable sponsors. So I think it's a great opportunity.
Oh, that's wonderful. That's great. So tell us more. Tell us what you're working on. Tell us the things that you find on the institutional side that are actually Now that the watershed has broken in open a little bit, what are things that you can see on the horizon? What are some positive things that you've been working on with some of the clients that you work for?
Sure. Well, if you think about it, some of the really interesting things are, we still live in this, T+2 world. And, in crypto and blockchain thing, transactions, they really happen instantaneously and they settle instantaneously. So you're really in the T world. So I think that the improvements and changes that go on in crypto will speed up our processes on traditional finance.
Hmm.
I think what you're looking and you're seeing is a lot of traditional finance companies looking at blockchain technology and different, initiatives that are being done in crypto and seeing what they can develop and adopt into traditional finance. So, we're not so far away from a world where we get to T+1, I think. I don't think we'll ever get to T just because of the nature and complexity of things, but T+1 would be a great place to be.
And
Another thing is,
compliance, right? Compliance
yeah,
officers
and
still want to be able
compliance.
to say yes or no.
Yes. But what's really interesting too, Frank, is in the land of crypto and decentralized finance, we have the ability to trade asset for asset, and that's not something we can currently do in traditional finance. So, maybe in the future you could trade a share of your Apple stock for Amazon stock and not having to go from Apple to cash to Amazon. In crypto, we can go from one crypto to another in one transaction and settle it instantaneously. So there's a lot of really neat and interesting things that are being done in the crypto sphere.
Can we unpack that for just a second? This is something that I found really fascinating whenever I was at one of the conferences fairly recently, and it was on the same line. And tell me if it's not on task, please let me know. But when I saw that, I think it was Franklin Templeton that launched I believe it might have been a money market fund, but basically they were using on-chain technology, and it wasn't that they were actually using crypto or buying crypto. They were actually using the Web3 technology in order to save money on execution and trading. Can you talk a little bit about that? Because I think that actually kind of fits in with what you're talking about here, right?
Yeah, look, I was at a conference at the New York Stock Exchange, ironically, of all places.
Hmm.
And it was a crypto conference talking with institutions about ways that they can use the technology to save money. One of the ways is, tokenizing these money market funds and the trading that they use and implementing that technology takes a lot of costs out of it. And also, the movement is just more fluid and you can see what wallets are holding which, assets in a much quicker, more transparent way. So I think a lot of, traditional financial institutions are going to be using this technology to wring costs out of their products.
Mhm.
So it's not just about speculation and about using cryptocurrency and some people don't think they have good use cases, some of us do, but it's really about bringing kind of those costs out of the ecosystem that exists on the traditional side and making it more efficient. And also, if you think about who's owning, who's owning what securities, on the blockchain you can see what wallets hold what. So while you still have anonymity with the wallets, there's still more transparency in knowing like what wallet is holding what amounts of what asset.
That brings up an idea. Like, can you talk about maybe some of the hurdles for like asset to asset or legal or technical in that area?
Well, what's interesting is a lot of legacy traditional financial services companies, their technology, their internal technology still has hoops to catch up. When you look at the blockchain technology, it's very, up to date and recent. And so I think that they can migrate over to that and incorporate that technology in a way that can just add efficiencies to their business. If you think about a financial institution that's bought other companies, a lot of times they're cobbling together different legacy systems and they haven't spent the time or the effort. It's a lot of effort and it's a lot of money and a lot of time to get all their systems to talk to each other or move or migrate onto one system. So using this technology can really efficiently do that in a
Mhm.
scalable way. And it could be a real cost saver for these companies. And Franklin Templeton's taken the lead in doing that and is seeing the benefits from it.
Is that like, so I'm familiar on a variety of different types of industries, and I see this tech stack that is, starts with COBOL. It goes all the way through where we are now, but it's, as you said, it's a heavy lift to try to get that technology spun over. Is it as easy as, well, I mean, it's never going to be super easy, but like what are some of the, if somebody wanted to really start looking into that, what would be the first step other than hiring David Brill, of course?
Well, obviously they should come to me and my firm. I work for FTI Consulting, and talk to us, and we'd be happy. We work with a lot of institutions that are looking to, develop blockchain initiatives or incorporate blockchain and crypto into their workflow.
Mm-hmm.
But a lot of it is looking at the different blockchains and finding one that is scalable in a way that they want to do transactions,
Mm-hmm.
onboard people and such. So they have different options. A lot of people use Ethereum. There's Solana, a couple of others, Avalanche, that are growing and becoming more popular.
Mm-hmm.
So a lot of gaming companies are already using some of the blockchains for their games and for players on their games to buy different products for the games. And it's a very seamless use case for gaming. So I think gamers are loving, the added benefits of using the blockchain.
Yeah. And of course, I'm going to talk my own book here, people. Yeah. Similarly, I was an early investor in a token called Oasis, and that's one of their big draws is that, like, let's say that you play Fortnite or you play Halo or you play XYZ different game and you bought skins for these different games. If you take a look at some of the movies and the things out there, it's like, I already paid for it in this game. It's just a skin. I want it on this game too. And this seems like a great way to be able to cross-platform as long as they're all participating. So that's actually fun. And
Yeah, and you paid for it, like you said, Frank. People should have, access to these things. So I think it's great. And I'm not particularly a gamer, but I definitely played the old school games back in the day. And yeah, it would have been cool when I was playing a football game if I had to pay for something extra that I could have kept it.
yeah. Yeah. And then you might be able to monetize it at some point,
Yeah, like a whole idea of a marketplace, and if your skin or whatever you're doing becomes more popular and people want it, because Frank, we know you're a great player in these games, so it could become more valuable, and you should see the value in it.
Mm-hmm. Mm-hmm. Yeah, for sure.
Yeah, I totally agree. I mean, look, and gamers are really passionate about these things, so like, why not let them have access to these skins and other things that they want to play with, and use them in different arenas and different games.
Awesome. So what's next? What's next on the either legal, regulatory, what are some trends that you see that are actually positive that are going to, like, what are the next dominoes to drop now that we've gotten past one of the biggest hurdles, which was obviously a little bit of regulatory clarity?
Yeah, so I think a lot of people are looking to see if we see an Ethereum ETF as the next one approved. And so we have a futures Ethereum ETF, but we don't have a spot ETF. And a spot is just the actual Ether itself. So there are a couple of applications in the first half of this year. It's really hard to prognosticate what the government's going to do. But I think, wearing my hopeful, ecosystem hat, it would be great to see an Ethereum ETF approved in 2024.
Mm-hmm.
I think on the regulatory side, Frank, it's a tough year to see a lot of movement. We have a big election coming up.
Wait, what? We do?
Yeah, it looks like we're going to have a rematch of
Yeah.
2020 election. Trump won New Hampshire yesterday. And, with the geopolitical issues, I don't know that they'll be able to sort of focus on passing crypto legislation. But really, I think that depending on who wins in November, we could see a lot of movement in crypto going forward and legislation. It seems like it's become a little bit of a partisan issue, although I don't really think it should be, because it's really advancing technology and use cases for people. But, unfortunately, sometimes these things do become a little bit partisan. Other things I think we'll see is like the gaming is going to blow up this year. I think it's really
Mhm.
there are going to be more games on different platforms. Maybe it's Oasis, maybe it's Immutable X, but I think it's really going to step to the front this year.
Mhm.
And I think you're going to see more tokenizing of real world assets. So trying to take assets that have value and unlocking that value through tokenization.
Mhm.
And they've
Mhm.
been trying to do that in real estate for a while, and I'm hopeful that they'll
Yeah.
make some progress with that too.
I mean, when I heard about smart contracts at the very beginning, the first thing that I thought of was, oh my Lord, why is it that we still have to have title insurance? I mean, we know, like, we should be able to tell who owns this piece of property. And this just felt like such a immediate use case for this technology to be able to say, okay, here it is. There it is. It's right here. This is a proof that this is yours, right? You know, it should
Yeah.
going to a book 14 years ago written on page 13, you know, it just seems like a pretty inefficient way to do it. And then you have to pay these title insurance companies, you know, some kind of insurance just to make sure that it was done right. So yeah, I completely agree. And on that note, and this isn't a what if, this is kind of a which or. So, you know, you hear a lot of times the private versus public blockchains. For you know, for most of the clients you deal with, which do you recommend? And then, you know, is there a value to a private blockchain over a centralized database, in your opinion?
And look, I think when you have a public blockchain, you get the benefit of all the building and all the knowledge in that blockchain. But there's sometimes where you want to have a blockchain just for certain individuals. Maybe if it's shipping and you want to have maybe 5 or 6 parties know exactly where their shipments are, or the value that's gone back and forth.
Mm.
It's not something the whole world needs to see,
Mm-hmm.
but that cohort of shippers and deliverers and suppliers want to see. And I think that can be really useful. So I think it really depends on, you know, what's the use case, who is it for,
Mm-hmm.
and then deciding on who it's for, you can decide on the visibility of it and whether it needs to be private or public.
Mm-hmm.
Look, you know, private blockchains sound like, oh, it's kind of sneaky and this and that, and it's not really that. It's just that there are instances where only a certain small cohort needs to know this information, but it needs to be shared with them in real time. So I think that's a good use case for a private blockchain.
Got it. And then this is one that I don't know whether or not it has specific immediate relevance or merging potential, but I see one of my big questions when it comes to obviously bringing in AI to it, bringing in you know, all the data that a company like Raytheon has and being able to keep track of that within their sandbox. Is this something that you see that maybe the Web3 technology would allow to keep it in that sandbox, or, you know, any challenges in that particular instance with the blockchain technology?
I mean, I think they can utilize it. Clearly, it would be, I would say, private and not public.
Right. Yeah.
Um, but you know, I think the defense contractors are pretty savvy with how they use the AI and different technologies. So I'm gonna punt that one a little bit.
Yeah. Sure.
I could be like, I'm gonna leave it up to our defense contractors to figure out the best way. But what I do think a great example though of how blockchain technology can be used is like clinical trials.
Mm.
Like if you can anonymize all the data that comes in through clinical trials, and you can have a blockchain that is amassing all the data so that different, you know, relevant parties can go in and look at that data and look at results, you know, while anonymizing the individuals. I think that could be immensely helpful.
Mm-hmm.
And then if you could layer on AI on top of that to really, you know, use that supercomputing power to like look at different outcomes of different, you know, medicines, I think that could be really powerful. And that could really just, you know, even make it quicker how we can get results and sort of learn from our clinical trials.
Yeah, I agree.
Frank said
I'm trying to look
portfolio,
up right now, so please keep talking about that. But I met someone at one of my most recent conferences, and I wanted to find your names. I'll definitely put it in the show notes, and you know, people can take a look. But I met a physician who was talking about advocating for your own information, right? There are all these big problems with HIPAA and with security and not having your own individual data in a you know, in your own basically wallet or in your own your own data that you can take from physician to physician and being able to say, look, I'm allergic to these things, or these are the things that I've had done, so that there's no miscommunication among health insurance. And so I thought that was really fascinating to be able to actually use blockchain to be able to keep that data HIPAA compliant, right?
Yeah. I mean, I think there's great use cases in healthcare. I think the issue is you could have it all, like you could have your anonymized wallet or address and have that information. It's really, the concern of, like, let's say you wore it on a wristband or something. And if somebody got a hold of that wristband and then they could, access it. I think the ability to put all the information on the blockchain is there. It's really the securing it part that's the issue.
Mm-hmm.
Look, EMR, electronic medical records, works great if you're within one hospital system.
Mm-hmm.
Like if you're within, let's just say New York, if you're within NYU, they have a whole system. And if you see an NYU doctor, they can see the notes and, test results from anything you've done at NYU.
Mm-hmm.
So how do you make that, broader outside of that one hospital network into like a global US network? And how do you scale it out? I think that's where the HIPAA issue comes in, as far as like, how do you protect that data? Because the ability to capture it exists.
Right. And on that same note, even being outside of the hospital networks, whenever if you're private paying stuff because your insurance company isn't paying for it, and so you get GI maps, or you get genetic testing, or you get something that is absolutely relevant to figure out whether or not, what's the specificity of this drug working on me versus my sister or my family. If you have that data, being able to share that with the physicians or with the medical group so that they know what it is and there are no mistakes made, whether it's at the doctor's level or the hospital level. But yeah, this is just one specific great use case for that type of technology to keep it secure and to make sure it's yours, and so that you have your own control over it. What are some other, some of your current clients, other than like health insurance or healthcare? What are some other really fascinating cases that you're working on, or things that you're looking at and you're doing?
Sure. Well, look, I think, as far as supply chain, it's a really good use case for supply chain. I know that's not necessarily sexy, but we see.
No, it's great.
How important supply chain is. And, we have issues in the Red Sea right now. And, during COVID, we had issues about not manufacturing on shore. So I think that's really important for that. It can be really helpful with provenance of goods and medicines and things like that, to make sure that, if medicines are getting into the marketplace, that they actually are made from the manufacturers and they haven't sort of somehow something has gotten into the medicines that don't belong. I think the use cases of NFTs beyond sort of clout, we'll call it, or beyond sort of showing off, we'll see that, and like membership being run through NFTs and things like that. And airline loyalty programs and all those kind of things, I think, are really great use cases for the blockchain and crypto. Mm-hmm. We really see very innovative companies come to us across, and whether it's entertainment, supply chain, financial services, they all want to see the technology, see how they can use it and enhance what they're offering already. Mm-hmm. And a lot of it is really like loyalty based too, Frank. Like you want to know who in your company, what are your customers using? Why do they come to us? And really tracking that and doing it in a way that I don't think is inappropriate. It's an appropriate way, but it's really knowing who your followers are, who are users of your brand, and really leveraging that knowledge.
Yeah, it's interesting. Having known you before I really got active in any kind of learning of that, for lack of a better term, crypto, right? Web3. You were, when I met you, you had just worked it from the angle of not selling the sizzle, but you were immediately involved in how do we make this technology work in the real world. You were one of the adults in the room that was, like, unlike Napster, right? You were one of these companies that was like, okay, instead of ripping off the technology or making it a scam, how do we make this a real technology that is going to be used in the real world? And that
Yeah,
actually,
no,
that was formative to me, because from that point on, I didn't really fall for the sizzle. I kept paying attention to things that you had mentioned to me in past conversations. Uh, what are some like innovative financial industry applications? Is it all just settlement, or do you think that there may be some other opportunities that other clients might be interested in?
well, look, I think first of all, it's an alternative asset class. Bitcoin. I made some notes before our meeting today, and Bitcoin was up 155% in 2023. So I'd say it had a good year. So beyond just being an asset class with opportunity for upside, I think that, you know, I think there are a lot of use cases around taking some of the costs out of the legacy businesses like we talked about before,
Mm-hmm.
and like making things smoother. Like, for instance, right now it's hard to know who a shareholder base is in a company because
Mm-hmm.
it's usually owned in the name of the broker. So, Merrill Lynch may own 40%, or, Fidelity may hold 30%, of the shares of stock, but it's really on behalf of their customers.
Right.
So if we get to a place where, companies are able to see who their shareholders are, the blockchain is one way that could make that easier to see, like who actually owns what. And depending on if the individual wallets become public or private, you could actually see exactly who owns what and then how many shares they own. So instead of seeing the aggregate broker, like Fidelity owns 30% of Amazon because that's their individual users who are on the Fidelity platform are holding that, you could see that Frank was an early believer in Amazon, and he's got 100,000 shares. So I think they're
Yeah.
really unique use cases.
And that might solve part of our problem, which we have with some of our politicians that may or may not own securities ahead of key decisions, right?
Yeah.
Being able to see who owns and when. Now that also may unburden some of these filing requirements as well. I think that's an interesting, fascinating idea. Here's a question for you that kind of popped into my head a while back, and it has to do with, if you're familiar with margin
Sure.
hypothecation agreements. Like, you've got certain companies like Interactive Brokers, not a client, but if you want to be and want to sponsor the show, feel free to give us a call. But like, companies like Interactive Broker and Fidelity and Schwab and some of the different custodians that do not pay you any percentage of that borrowing that they get for loaning out your securities. Is that something that you're going to see, or that you're already seeing, or is that something that's already available? Like, for example, like, with these ETFs, there's, for the demand that's out there, maybe there's not enough supply. Maybe the institutions and these ETFs are borrowing from the big firms, but do the end users, the end owners of those particular assets, get some part of that when they're being loaned out? Like, I know Coinbase is custodying a lot of stuff for some of the bigger players, but like for the ETFs, are they borrowing from those types of those custodians?
So my understanding is right now that they're cash settled ETFs, so that they have to settle them, and that I don't think borrowing has been enabled for them. And because there's in such short supply, Frank, it'd be very hard to go to rehypothecate a meaningful amount of Bitcoin, because if you ever had to cover that, it could cause a real dislocation. But
Got
I
it.
do
Yeah.
think that the staking feature in decentralized finance enables people to earn money for putting some of their tokens onto the platform and staking them to execute transactions, and you can lend them out through these different platforms and be paid for the lending.
Hmm.
So I do see crypto and blockchain creating a world where people are compensated for rehypothecation. I think with Bitcoin it's tough because there's just such a finite amount,
Mm-hmm.
and a lot of it is locked away in cold storage, and so you have to be very careful if you're going short, or you're you in any kind of meaningful size, because if you're forced to cover those, it could be painful to have to cover that.
Sure. Hey, let's talk about something not terribly controversial, but just interesting, that I'm really curious about. I'm not sure how much you know about it, but Rumor has it that the U.S. government, from seizures and et cetera, owns a lot of crypto. If
They
they
do.
own so much crypto, why would they have been so against it?
Well, it's a double-edged sword. They own it not because they've been buying it in the markets, but because they've been confiscating it through,
Mm-hmm.
enforcement actions. So I don't think those are, I don't think that they definitely go together. But they do hold a lot of it, and also there's a bunch of Bitcoin that's going to be distributed from Mount Gox 10 years later. I think they're finally going to get their crypto. So what I would say is they do own it and they sell it regularly, but it doesn't make them a proponent of it. It's really more through enforcement actions or tax actions that they confiscated it.
So maybe they'll have a tiny itty bitty little closet with a server with absolutely no connection to anything outside of the government in Fort Knox, and justify another little like some people with guns outside.
No, I think they bring it through some of the major players.
Mhm.
I think that's how they've been doing it, which is appropriate. And they sell it whenever they deem appropriate. But they do have it, but it's really not because they've been in the market buying it. It's really been through confiscations and tax enforcement. So,
Right.
but it is an interesting development. It is a bit ironic because the government hasn't been a big proponent of it. So it's interesting how that's come about.
Wow. Well, I've been doing a lot of talking. You tell me. Talk with me. Tell me. Give me some questions. Give me some. What?
Sure.
Yeah.
Well, what do you hear from people you deal with when they think about investing in crypto? Like, do your clients, are they excited about the ETF? Do they want exposure to the space? Is there a difference in the age group that
It's
you find of your clients?
it's really interesting. I've met people all along the spectrum, and I kind of feel like, and I don't know if this is because of how fearful they are of government involvement or getting in trouble or whatnot, but it wasn't until I asked, I bought GBTC and ETHE in my client portfolio a couple of years ago, and I was just a small amount. And it turned out that happened to be the year that the regulators came out to our firm to do the checkup. And I get a phone call from my firm that told me, we're not comfortable with this. Not my firm, but the regulators were uncomfortable with me holding it, which really irritated me because I'm an institutional investor. I've got all these certifications, and if I'm buying it on something that's a publicly traded, exchange, how dare you? But, I don't want to ruffle any feathers. I don't want the eye of Sauron on me, so I sold it. Did you hear me? I sold it.
I know.
What is my recourse?
Like...
First of all, what's my recourse? Number two, secondarily, I feel like unless I ask them specifically, they don't even talk about it. And that's a shame because it's, I hold myself out to my clients as a personal CFO. I handle anything pecuniary in their nature. If somebody comes into their restaurant and says, hey, I want you to change your point of sale system, I say, call me, right? So I want to help you make those decisions. But that's one conversation that almost nobody's had. But every once in a while, I'll talk to somebody and they're like, oh yeah, I own some. And I'm like, wow, that's good to know. It's good to know because I want you to have some exposure. I couldn't do anything about it, obviously. But and I think that people who have seen my podcast know how I feel about, exposure to the asset class. Definitely a believer in the technology itself. So, specific individual coins, I generally don't talk about, but exposure to the asset class, yeah. But people don't talk about it. They talk to each other about it. And then it's like, who caught the big fish? Like, oh yeah, I own a bunch. Do you really? What's a bunch, right?
Well, I'll tell you, it's funny you say that because I've owned my IRA, ETHE and GBTC, because I wanted exposure to crypto, but I didn't want to self-custody. And I thought it was very complicated to hold crypto in your, IRA, without holding it like in a trust account, even with the high fees.
Yeah.
I mean, and those two performed really well last year. They were both over 200% last year. So
Mhm.
it's unfortunate that sort of, you got the knock on the door about owning it in your portfolio and sort of were, massaged to, consider not holding it.
Mhm.
So I think this is good from that perspective. But I think a lot of regulation, when you think about it, is like, what do we think the role of regulators should be?
Mhm.
Do we think we're educated enough that we can make judgments on what we should own and what we shouldn't? Or do we need somebody to make those judgments for us?
Mhm.
And so, like in your case, like if it was me personally, I would have found it off putting that, I'm being told, even though I'm obviously an expert and I have all these certifications, like what I can and can't own, especially since it's trading on markets and it is, regulated. Yeah, I would have had a real problem.
Yeah.
Maybe that's why I'm not an FA right now, right?
Yeah, and that's the thing is like, I can complain all I want, and I have the documentation, but like, I could have bought it back, right? So they're going to come up with a bunch of different reasons, but as I said, it just makes it very difficult to have that conversation when we haven't been traditionally involved in talking about it. I know Rick Edelman has been very active in trying to get financial advisors to learn about it. But, much like other people, if you take a look at the financial advice industry, if you look at financial advisors like myself, I'm on the young end of the real financial advisors that are left. So the majority of the people in this industry that do advice, the average age is, I think, in the 60s at this point. And so those are people that are traditionally not going to be interested in doing a lot of new stuff when the old stuff works just fine for them, I guess, So I will be interested to see how the new generation of advisors comes up and how this technology gets adopted and how it ends up working its way into the traditional system. The positives obviously are with settlement of T or T+1 or T+2 are fine, but then again, you also have the risk then of the bank run, right? Like we saw
But
with some of these financial institutions.
and I think that, Frank, I'm glad you brought this up because one point I really want to make is the issues with the intermediaries that failed were not issues with the technology. It's because they were really doing other things besides acting as an exchange. The exchanges themselves weren't the issue. It was just when they went into other markets, into lending, into rehypothecation, that's where they ran into trouble and ultimately failed.
Mm.
So I think one thing I want your listeners to remember is that there was never an issue with Bitcoin or Ethereum or these different major cryptos where its technology was really an issue with the intermediaries.
Mhm.
And I think, unfortunately, crypto in 2022 had, its version of 2008.
Mhm.
And so all those lessons that we learned in 2008, unfortunately, the crypto intermediaries had to relearn in 2022.
Mm. Do you have any favorites as far as intermediaries? There's obviously, and be as broad as you want, not recommending anything individually, but you've got some of the majors out there. You've got Fidelity, BlackRock, and it seems like everyone's talking about their fees. I think that structurally, they have some good things and they've got some interesting things. Like I know that Fidelity self-custodies, right? The negative is that you can't take it with you. You can't move it anywhere. You have to keep it there. But at least it's Fidelity, and hopefully they'll have it whenever you want to sell it.
Yeah.
Versus the BlackRocks, versus the other the ones that are, let you have access to it. But as I've seen in the mutual fund business, it's a race to the bottom on fees, and then they try to make their money by having you in there in other ways. But do you see any similarities or any specific things that people should really think about now that it is available, but maybe they don't know the right way to go about their research?
Sure. Well, look, I don't think now, even though there's now an ETF, that a lot of people necessarily understand the technology. So I think it's important, if you want exposure to an asset class, to have it through, a sponsor that you're comfortable with. So like, look, people are comfortable with BlackRock, they're comfortable with Fidelity, they're comfortable with Franklin Templeton, they're comfortable with other, sponsors. And I think it's perfectly fine to pick a sponsor you're comfortable with and own it. I personally don't sweat a couple of basis points. I'm more like, okay, I know that they're going to run this well, and I know they're accountable, and that's important to me.
Hmm.
Other people, if that is really important to them, they can, look and do the research and see the benefits. Some are offering 6 months with no fees.
Hmm.
So I think it's really, ETFs are safe products. I
Hmm.
mean, they are, CIPC protected. And, I think from my standpoint, it's really just finding a sponsor you're comfortable with.
Hmm.
I don't think that, the deep research is going to unearth anything too controversial. I think they're mostly all run similarly. And so I think that's what's the most important thing.
I agree. There's so much, obviously there's fee disclosure and there, if you've got one that's charging 3% versus one that's 39 basis points, that's a whole different story. But for the most part, like these different companies you're paying for not just the exposure, but the back office behind it. And I say that across all ETFs and across all custodians. For many products, it's one thing to be fee sensitive, but don't be crazy if it's off by, a handful of basis points. It's comfort. Like if it's up 200%, what do you care if it was 39 basis points or 1%? Really, right?
I agree. I think sometimes people get a little too caught up in that. And look, I think in your role, I think you want to put your clients in products you feel comfortable with, you think are appropriate for them, and are with sponsors that you're comfortable with.
Yeah.
So at the end of the day, if somebody's putting $20,000 in something that pays 30 bips versus another product that's paying 28 bips, I mean, I haven't done the math, but it's really a rounding error
It's
ultimately.
nothing. Yeah, it's a negligible nothing burger, right?
Yeah, and so having the comfort that a sponsor that they're comfortable with and you're comfortable with managing their money, I think that's the most important thing.
Now, I know you have a podcast yourself. You've got your own podcast. What is it? When does it come out? What's it about?
Sure. So I'm part of the Wall Street Blockchain Alliance. We have a podcast every noon on LinkedIn Live. I know you'll put it in the show notes, but it's WSBA.co. And myself and my two co-hosts really spend about 30 to 40 minutes deep diving on a few issues of the week. And we really give kind of deep takes on it. And I also give like a market overview of where I think the market's going.
Mm-hmm.
And I'm not an FA, but I kind of give a view of, based on the fundamentals and what's going on in the marketplace on a macro level, kind of give a view of where I think things are headed. And people seem to like it. And, we don't dodge questions. So we kind of give our personal takes. They're not representing our company. So it's really fun. And we get a lot of interesting questions. And we go down some rabbit holes sometimes. It's nice to have a little free form venue to do that.
Yeah, that's
we have
great.
A channel too.
That's great. I mean, that's the thing is by not being registered or having any of that kind of exposure, you have the capacity to talk about what you think really matters, which I think is great. And I look forward to, I know I saw it and I subscribed to it so that I could kind of get some quick takes on that. I look forward to actually hearing more and more and more about it and having you on a little bit more. How can people get in touch with you? I know you're on LinkedIn. How are some other ways that people can find you and find some of your work? And more importantly, afterwards, what is it that you think, what are some critical things that you think people should do up front to start researching if they've never done it before, now that they feel comfortable, if they're a financial advisor that was waiting for the shoe to drop, and now that we have a little more flexibility, what are some things that you think they should do up front to make sure that they're not harming their investors?
Sure. So first of all, I work for FTI Consulting, and we work with a lot of corporations and companies and helping them implement solutions. So I'm certainly accessible there, and I'm on the FTI website. I think it's really important for FAs, and I talk to some, I have conversations with them sometimes about really just understanding what Bitcoin is, the amount in distribution, and why it's relevant. And like, I think if you have a high tech portfolio, or if you have someone who owns some commodities, it's worth considering crypto as a commodity to own. It can't get inflated. And so, with that constant amount of supply, as our dollar is kind of being devalued, Bitcoin has become more valuable. So I think those are some things they should do. And I think they should have these conversations with their younger, customers.
Mm-hmm.
I think your under 40 crowd knows people who work in the space or knows people in tech and may want exposure to it. And I think taking an affirmative role about having a conversation about it is beneficial to their clients.
Mm-hmm. Awesome. That's great.
Yeah. And I think what's great about my podcast is that we really get to talk about things, and we do it in a way, in a responsible way. Like we don't talk about specific things people should invest in. We just directionally point them to things we think are interesting. Like the gaming theme that I've talked about with you, I talk about in our podcast about why people are excited about it and things like that. So I think there's really an opportunity to gain a lot of insight without nobody shilling anything. It's really what we really believe and how we view the market is going.
Yeah, I agree with you on that gaming front. Again, I haven't been a gamer in many, 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 many years, but I remember how much fun it was, the little escapes. But it's not an insignificant cost. Sometimes, you've got parents who get these gift cards so that their kids could buy this and that skin. And there's a lot of money. Obviously, there's a lot of money in that industry. And like art, why would you buy something? Nice painting. Why would you actually buy something and not be able to monetize it? This kind of may open it up so that you have the capacity, if you're no longer into that. Hey, look, I found the rookie card. 10 years later, it's a Mickey Mantle rookie card, right?
Yeah. No, look, absolutely. I mean, I found it's funny. When I moved to South Florida, I found, I have a OJ Simpson card. I have a Mark McGuire card. I found all these valuable Larry Bird card. Yeah, and you should be able to monetize them. And people should, if you've gotten to level 30 and you've gotten certain skins because you've gotten that well, you should be able to monetize that. The whole point of the game is to get you to interact with it. So why shouldn't you see some of the benefit from it?
Agreed. Well, David, it's been awesome. It's been a pleasure. I'd love to do this again. Maybe get on your podcast sometime and chat and listen and hear what you guys have to say, and be the guy in the middle seat going, yeah.
No, we'd love to have you, as long as you don't wear a suit jacket on our podcast.
I won't. Yeah, today, as I told you yesterday, I was like, I'm not going to dress up. And then I found out I had meetings right after this. Well, I guess I got to suit up after all.
No worries. Yeah, no, look, I think we'd be happy to have you. And I really encourage your listeners, to really look at it as an opportunity to get exposure to something different. And it may not be for everyone, but I think it's worth knowing about, because what we're talking about now is going to become so much more part of the traditional financial ecosystem in 1 to 2 to 3 years, that your listeners are really going to be ahead of the game about what's coming.
Yeah, right. And we've seen it happen already. We saw originally it was all stocks, and then there were mutual funds, and then they moved to ETFs, and everyone was like, well, why would we do an ETF? The ETF was originally created so that money managers, institutional money managers, would be able to place funds in these ETFs until they figured out where they were going to put the money so that they wouldn't miss their best fit index and lose money on that float. And now you see them as an actual investment vehicle that has lower fees and lower costs. And now you're going to see, the same thing that could happen with this asset class. So, even less fees for all, equities involved potentially. So yeah, I agree with you. And I think that if anyone will listen, if anyone is listening, if anyone researches this, get ahead of the curve, because technology is new technology. It will be used. It will be utilized. We have proof that people are interested. We went through this really rough, bad behavior crypto winter, and it seems like things have started to shake out, and now we're kind of moving in a good direction. And I'm really excited about it. I hope you are, but I definitely am.
My voice isn't great right now, but I'm super excited about the space and the promise. And look, technology is so transformative. Just think about all the things that like we didn't have when we were in high school or in college, and now people have. It's amazing, and it's just going to continue to evolve. And so I'm like, we're really at the forefront of something really big. And I think a couple of years from now, people will listen to us talking, and they'll be like, oh, this is so obvious. Like, what was so different about what they were talking about? But then, like with the 2024 lens, I'll understand that we were really ahead of what was coming.
But you didn't say that. You guys didn't tell me that was coming. I'm just waiting for it.
Yeah. Well, they'll just have to wait for the next time you and I talk to get a little more inside baseball on it.
That's right. Well, it was amazing catching up with you. When I get down into the Florida area, actually, no, I'm going to see you for sure at Consensus. So I look forward to seeing you there. And let's totally keep in touch. I can't wait to put you in touch with some of the people that I've been working with. Can't wait to hear what you guys are working on. And, for all of you listening out there, make sure that you watch his podcast, listen to his podcast, check him out, friend him on all the social media sites, and take a look on LinkedIn and keep track of what they're up to. Thanks, David.
I appreciate that, Frank. I'll look forward to having some barbecue with you in Austin.
Yes, sir. Awesome. Well, thanks everybody for joining us for another episode of Money in the Bank with Frank. David Brill, again, Managing Director, deep institutional and legal information on Web3 and crypto. Follow him at his podcast, and we look forward to seeing you guys next week.
All right. Thanks, Frank. It's been a pleasure to be here.
Great. Take care, Dave.
Hey, thanks for watching The Merge. We've got a ton more stuff for you to watch on YouTube, on Instagram, on TikTok, everywhere. Check us out.